Welcome to the Deep Dive with Farmtips Diary. Today we explore how solar farms are becoming a game changer for agricultural finances, from saving money to creating new income streams, all while shielding farms from energy market chaos. In this deep dive, we will uncover how solar panels deliver long-term savings, examine real-world case studies of profitable solar farms, explore incentives that make installation easier, and understand the financial models that make energy independence possible for farmers across the world. A new kind of crop. Imagine a field of sunlight where the harvest is not measured in bushels or kilograms, but in kilograms. Across the world, more and more farmers are realizing that the most abundant resource they have is not just land, but light. By installing solar panels on rooftops, barns, or even above their crops, they are turning the sky into a second source of income. This is the foundation of financial stability that solar energy brings. Unlike traditional crops that face unpredictable yields, volatile prices, and climate risks, solar energy provides something farmers rarely enjoy: predictability. Once panels are installed, their output is remarkably steady. Every hour of sunlight captured translates to electricity that can either power the farm's operations or be sold back to the grid. The result is a consistent, measurable reduction in utility bills and, in many cases, a brand new revenue stream. This shift represents a profound mental change in agriculture. For generations, farmers have managed uncertainty. Solar power introduces a rare constant into an unpredictable profession: reliable energy at a stable cost. The mechanics of predictable savings. When farmers install solar panels, their goal is simple: to replace or offset the electricity they currently buy from the grid. The financial logic is powerful. Every kilowatt-hour produced on-site is one that does not need to be purchased, and because solar systems often last more than 25 years, this translates to decades of predictable savings. Consider a mid-sized dairy farm that installs a 100-kilowatt system on its barn roof. The upfront investment might seem large, but once operational, it can reduce annual energy costs by up to 60%. That means tens of thousands of dollars saved each year. Over 2 decades, that same system could save hundreds of thousands, far surpassing its installation cost. The most remarkable part is that once paid off, solar panels continue to generate power with minimal maintenance. While fuel prices rise, electricity costs fluctuate, and inflation erodes profit margins, the sun remains free. For many farms, this stability transforms their financial planning. Instead of guessing how much power bills will rise next year, they can project their energy costs with precision, an advantage that is especially valuable in a business where every dollar counts. Power purchase agreements. The second harvest. Not every farmer has the upfront capital to buy solar panels outright. That is where power purchase agreements, or PPAs, enter the picture. A PPA allows a third-party company to install and maintain solar panels on a farm's property. The farmer then agrees to purchase the electricity generated by those panels at a fixed, often discounted rate for a set number of years. This arrangement creates a win-win. The farmer enjoys lower, predictable energy costs without paying for installation or maintenance, while the solar company profits from the consistent sale of electricity. Across the United States and Europe, farms that sign PPAs are reporting impressive results. A vegetable farm in California cut its energy expenses by 35% in its first year under a PPA. A grain farm in Spain used its roof space to host panels and now earns an additional income stream by selling excess power back to the grid. These examples highlight how energy independence does not always require ownership. Sometimes it begins with partnership, a collaborative approach where farmers lease their sunlight and, in return, gain stability. Incentives and grants. The financial boost. Governments around the world recognize that renewable energy adoption on farms is not just good for farmers. It is essential for national sustainability. In the United States, programs like the Rural Energy for America program (REAP) offer grants that cover up to 50% of installation costs. In the European Union, the Common Agricultural Policy has introduced renewable energy subsidies that prioritize rural areas. In countries like India, where sunlight is abundant but financing is limited, government-backed low-interest loans and tax credits make solar systems attainable for smallholders. These incentives are not charity. They are strategic investments. Every farm that installs solar panels reduces national energy demand, stabilizes food production costs, and contributes to carbon reduction targets. For farmers, these grants and credits can mean the difference between dreaming about solar and actually switching it on. The combination of falling hardware prices and rising support programs means the payback timeline for solar energy is shrinking fast in some cases to less than 5 years, shielding against price spikes. Electricity prices are among the most unpredictable costs in farming. When the global energy market surges, farms feel it immediately. In cold storage, irrigation, and machinery operation, solar power acts as a shield against this volatility. Once a farm generates its own electricity, it becomes partially insulated from external shocks. Whether global oil prices skyrocket or regional power companies raise rates, the farmer's solar panels continue producing energy at no additional cost. This is not just an economic advantage, but a psychological one. Knowing that a portion of energy demand is self-supplied gives farmers confidence to plan ahead. It creates breathing room in their budgets and reduces their exposure to inflationary pressure. In an age of climate instability and global energy disruptions, this energy autonomy has become as important as owning land or managing water. Energy security is financial security. The real payback, the phrase solar payback, often raises eyebrows. How long does it actually take before the panels pay for themselves? The answer depends on local conditions, incentives, and electricity prices. In sunny states like Arizona or Florida, payback can happen in as little as 5 years. In areas with fewer sunlight hours or higher installation costs, it might stretch to 8 or 10 years. But what matters is not just the payback period, it is what comes after. Once the system is paid off, the farm effectively earns free electricity for another decade or more. This long-term horizon is why so many farmers describe solar as an investment, not an expense. In addition, modern financing options have made it easier to start. Low-interest green loans, leasing models, and cooperative investments are making solar accessible even to small and medium-sized farms. Farmers are discovering that their solar installations do more than reduce bills, they generate equity. A farm with solar panels has higher asset value and lower operational risk, making it more attractive to lenders and investors. Real-world examples. In Vermont, a dairy farm installed a 300-kilowatt system that now covers nearly all of its power needs. The farm reports savings of over $40,000 annually and expects full payback in less than 6 years. In Australia, grain growers in New South Wales installed solar panels combined with battery storage to manage irrigation pumps. During peak sunlight, they export excess electricity, earning income even while their crops grow. In Germany, where policies support dual-use solar systems, fruit farms have installed panels above orchards. The shade not only produces power but also protects crops from heat stress and hail, improving yield quality. Each of these farms tells the same story in different ways. Solar energy stabilizes what was once uncertain, turns sunlight into income, and transforms the economics of agriculture from reactive to proactive. The bigger picture. Beyond the farm gate, solar adoption carries larger implications. When rural areas generate their own energy, they strengthen national grids. They reduce the need for long-distance transmission lines and cut carbon emissions. They also redefine what it means to be a farmer, not just a food producer, but a power producer. This evolution fits into a global trend known as agrivoltaics, where land simultaneously produces crops and electricity. Studies show that combining the two can actually increase total productivity per hectare by more than 60%. For policymakers, this represents a vision of farming that is not at odds with sustainability, but central to it. For farmers, it represents a way to thrive, not just survive, in an unpredictable economy. Preparing for the next decade, looking ahead, the role of solar energy in agriculture will only grow. Panel efficiency continues to improve. Costs continue to fall, and storage technologies are making energy usable even at night. Future farms will likely operate with intelligent systems that balance when to consume and when to sell power. Artificial intelligence will analyze weather patterns to predict optimal energy production. Farmers may one day trade energy credits the same way they sell grain or milk. The economics are shifting rapidly. In the near future, not having solar may become a competitive disadvantage. The farms that adopt early will not only save more, but also secure their place in the energy-food nexus, shaping global sustainability. Recap. We have seen how solar power transforms farmland into a reliable source of savings and income. We explored how predictable energy costs stabilize farm budgets, how power purchase agreements create opportunities without heavy investments, and how incentives and grants accelerate adoption. We learned how solar shields farmers from volatile electricity markets and how the real payback extends far beyond the numbers. If you found this exploration insightful, remember to like this video, share it with others, and subscribe to Farmtips Diary. Click the notification bell so you never miss a new deep dive. We hope this exploration has been valuable. Thanks for joining us on this deep dive. See you again on our next deep dive.